Welcome to this week's look at the state of the New York City real estate market. This is for the week of June 24th to June 30th. We're going to be covering the luxury market, the Manhattan market, and the Brooklyn market. This market has had a little bit of a turnaround, so if you are an active buyer or seller, be sure you stick around for this full report because there's a lot of information in here that you'll want to know. And at the end of this report, I'm going to be giving you my recommendations so that you can use those to ensure that you have the best possible outcome. Before we get started, though, I do want to mention something, and that is this. I am never too busy to help you, whatever the puzzle may be, whether it's a big puzzle or a small puzzle, I'm here to help. I'm a real estate advisor, and that means that I help my clients with whatever their real estate situation may be. As a Sotheby's Global advisor, that means that I can literally help you anywhere in the world. So if you have a real estate question, or your friend has a real estate question, or a loved one has a real estate question, please reach out to me. I am always happy to help you. All right, we're going to get started now with the luxury report. And wow, another 30 contracts signed for last week. That is the same as the previous week. These are for properties that are priced at $4 million and above. And as before, 4 of those properties were for the trophy property category, meaning they were for properties that were priced at $10 million and above. Interesting, the number 1 and the number 2 contracts were for brownstones. And we're going to talk about that right now. The number 1 contract was 15 East 93rd Street. It was asking just under $13 million. It was reduced from just under $16 million when it was listed back in July of 2023. It's a 5-story, 20-foot wide house. It has almost 7,300 square feet. It includes 7 bedrooms, 5 bathrooms, and 7 wood-burning fireplaces. There is a ground floor kitchen, a breakfast room, and a pantry. All of these open onto a landscaped garden. This house does not have an elevator, and so it'll be interesting to see what this buyer decides to do with it. It does need a renovation. The number 2 contract was 312 West 88th Street. It was asking $11,650,000. It was listed at the end of April. The 5-story, 21-foot wide house was built in 1893. It is close to 8,000 square feet, and it has been renovated. It has 7 bedrooms, 6.5 bathrooms, an elevator, radiant heat floors, multi-zoned central air, new Marvin windows, 3 gas fireplaces, 2 wood-burning fireplaces, and a 30-foot long landscaped garden. Interestingly, the seller paid $4.3 million for this property back in March of 2008. The total weekly asking price sales volume, $195,970,000. Average asking price, $6,532,333. Median asking price, $5,885,000. Average discount from original ask to last asking price, 10%. Average days on the market, 590. That's it for the luxury market. Well done. Luxury market just keeps marching along. If you have any questions about the luxury market, please post them below or reach out to me directly at Sotheby's. We're going to take a look now. What is going on in Manhattan and Brooklyn? As I said, this market has shifted. Very interesting. You'll see what's going on in a minute. The supply in Manhattan for the week, 219. That is down a little over 22%. Contract signed 240, had a little pop, 3% for the week. Off-market properties rose almost 33% for the week at 194. The supply for the month falling over 30%, 1,238 properties came on the market for the month, 979 contracts signed, down just under 1%. Off-market properties for the month, 669, just a little smidge over 24%. If we look at the Market Pulse reading for the month, we see it is down just a little over 1%. It is up a little over 1% for the month from last month, and up just shy, just really barely nothing from last year. We are in this kind of neutral market. We remain in this neutral place, although it is a more complicated story than that, and I will get into that at the end of the report. The liquidity pace chart representing the 30-day moving window of contract activity, 979, that is up a little over 2% for the month and just up a smidge from last year, again, remaining in this neutral market. As I mentioned, things are shifting and changing. I'll explain what that means at the end of this report, but for now, that is it for the look at Manhattan for last week. We're going to move on now to what is happening in Brooklyn. For the week, 167 properties came on the market in Brooklyn. That is down 4%. Contracts signed up a little over 1%, 141 contracts signed, off-market properties 80, that is up over 19%. The supply for the month in Brooklyn, 808, down 23%, contracts signed 591, down almost 7%, off-market properties up almost 28%, 295. The latest reading on the market pulse for Brooklyn, up just under 1%, up just a smidge from last month, down almost 3% from last year. However, we do remain basically in this neutral market. The liquidity pace chart, 591, down almost 3% from last month, down 11% from last year. We're going to put this all together now. And the shifts that I was mentioning, we're going to take a look at that right now. The luxury market continues to march right along. Again, this largely all-cash sector of the market continues with strong performances. Again, 30 contracts signed just like last week. 4 were in this trophy category just like last week. 19 were condos, 6 were co-ops, 1 was a condop, 4 were townhouses. As I mentioned, the 2 top contracts for last week were brownstones. That is not all that common, but it was nice to see. 14 were uptown, 16 were downtown. Again, as I've said often in this report, the luxury market does tend to be its own market. So often I say that this is a tale of 2 markets. This is the luxury market, and then there's everything else in Manhattan and Brooklyn. If we look at the Manhattan and Brooklyn markets, I mentioned at the beginning of this report that we are seeing a shift. What is the shift? Well, we remain in this neutral market overall for both Manhattan and Brooklyn. However, we are seeing the supply falling, and we are beginning to see a little pop in demand. We saw more demand in Manhattan than in Brooklyn. However, if we kind of look at the whole kind of picture of Brooklyn and Manhattan and compare them, overall, Brooklyn demand does seem to be outperforming Manhattan. The biggest shift that we are seeing is this pop in contract activity. We would not be expecting to see that this time of year. Sellers, you really want to be paying attention to this. We don't know if this is going to continue. We know that buyers have been sitting on the sidelines. They are getting likely very frustrated. They want to move on with their lives. We know everybody at a certain point wants to be making their decisions, have resolution, and move on with their life. So it could well be that people are just getting tired of waiting and they are deciding to make their move now. In any event, what we are not seeing is this usual slowdown that we would likely see this time of year. If anything, we are starting to see signs of life. Will this continue into the summer? It could, but given that this contract activity is actually one of the better weeks of this year, sellers pay attention. And buyers, if you're not getting the leverage that you thought you might be getting, that would likely explain it. If it continues, then it continues. We just won't know till we know. But if it might help to explain, if you are active in the market as either a buyer or seller, it would help to explain what's going on. From a price action standpoint, as you know, our market information is a bit delayed. Our latest contract activity data that we can point to is from April. And what we saw was that the prices are up 6.4% in April from March, and they are up 4% from April of last year. That would also likely mean for buyers that you have less leverage than you probably might have thought. And sellers, you are probably seeing that also reflected in the kind of offers that you're getting and likely accepting. Last thing I will say is that you could see from the charts that off-market properties are rising. That means there is going to be even less supply going forward. If you are a seller, that is probably good news for you as long as the buyers stay in the market and continue to step up. And if you are a buyer, that's likely to be a little bit frustrating for you because you won't see any real new inventory, not a lot of it anyway, until the fall. All right. Again, this is a tricky market and it is shifting and changing. As I said, I am never too busy to help you with your real estate needs, whether they are big or small. I am here and I am always happy to help. So reach out to me directly at Sotheby's, post your questions below, and I will help you sort out your situation and give you the best possible advice to help ensure your success. That is it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I am taking next week off for July 4th, and I will be back in 2 weeks. In the meantime, enjoy the holiday and take care.